So I'm on my break in between trading sessions, so I thought this would be a good time to do another video. So this video is going to be about what most retail traders do wrong, and it's essentially what I call calling tops and bottoms, but not as how people usually see it. So for me, I only look at double bottoms in an uptrend and double tops in a downtrend. I do not see whenever price creates support and it's hit twice and price is in a downtrend, I do not see that as a double bottom, because to me, a double bottom, double top is essentially a trend trade, a with trend movement that is just essentially a deep pullback. It's not quite a fake out to go beyond the last lower high or higher low, but it is going to back to an equal area that created the last impulse. So a lot of people get caught out by these kind of trades and this kind of movement. So for example, if you're looking at dollar CAD right now, to me, the only way that I am looking to trade right now on dollar CAD would be short. Now, obviously that can change, but my bias as of for the last wee while has been short. Now, there could be people that have entered, and there will be people that will have entered in this area, and they have got a bit of profit in this moment in time because they've seen obviously a push from here and then it's came down. Okay, it's gone just beyond, and this is more of a fake out example, but they've entered in here to then what they expect is a pullback because it's overextended, it's made a new low of the day, and they're essentially trying to get in on a reversal. Whereas to me, the most sensible way to trade this is you see the low of the day being made, expect a pullback, not a reversal, but expect a pullback. That structure on the lower time frames, the 1 hour holds, and then it's just about, well, what makes sense for price to come to then look for an entry. Well, to me, obviously before this strong bullish candle, I would have said, right, well, we have a potential break and retest area here, but due to the fact that we're beyond the lows of the previous day, we are coming into an area that is quite overextended. The break and retest could be a bit too much for price to respect in this particular example because we are overextended. So the next area would be this area here, which is essentially the 1 hour lower high, which it's the origin of the impulse that created the push. So this, now that it's held, bearish candle, gone up to the highs, taken out the liquidity, it's actually made a new high of the day, just about. This would actually make sense to then be like, right, well, the lower time frame structure right now will be long, but can we see a 5 minute, a 15-minute support break and then a pullback to enter with a well-protected stop loss to actually look for a push down into these lows again and then possibly down into the round number of 1.27. Whereas a lot of people are just focusing on always trying to get in the reversal, always trying to get into the reversal, even although the trend clearly is in the opposite direction on the higher time frames. Now, you are going to have some impulsive counter trend moves like this example on dollar CAD, but you don't need to catch them. The likelier way for price to trend is is always going to be in the direction of the trend until that trend is broken and then possibly changes, and then obviously it goes the other way. The whole point of a trend is the impulse is in that direction. An impulse is a move that on the time frame that you're looking at is essentially all in one, like predominantly in one direction, if not all in one direction for a certain period of time, whether that's a certain amount of candles or a certain amount of hours, whatever it is, that is essentially an impulse, and that is how people determine a trend. So rather than always trying to be first into what could possibly be a counter trend move, a reversal, sorry, just let that occur. And then if it does become something that does break structure on the higher time frame, the 1 hour, 4 hour, then if it's breaking structure in those time frames and it is a trend change, that trend is going to last for days anyway. So there's no need to be in first. There's absolutely no need. Whereas a lot of the times these pullbacks are just a pullback back into an area of value to then make that next push in line with the trend until price actually does want to do a reversal. Now, a reversal is very rarely clean as well. It's very rare that price is going to turn from an area and then just go from that area smoothly without returning to it a couple of times, or at least a couple of times. So therefore, if you're entering in where you think it could be happening and you are actually first and you do get a move, the likelihood is it's going to come very close, if not back to your entry point or slightly beyond into drawdown after getting that original impulse. It could come back there in a couple of hours or a couple of 4 hour candles the next day, whatever. But the likelihood that you're always going to get that reversal and price isn't going to come back to your entry point is very, very low. Whereas if you can do it and it's just after a pullback, but you're going in line with the higher time frame trend, the higher time frame immediate momentum, it's a lot more likely that price, once you've entered, is not going to be coming back to your area of entry as much, and also is more likely to break opposing structure because it's in line with the trend and the momentum. So I just wanted to keep this video short, and it's essentially just to say to you, you don't have to be first all the time. Yes, if you see a reversal area, you see a higher time frame structure area that makes sense for you to take a trade from, be aware of that area, but give price time. Give price time to create a 4 hour candle or a daily candle to then show that it's been respected. And the likelihood is, even if it doesn't come back all the way to the absolute origin, it's going to come at least 50%. At least 50% of the original move is going to be price is going to pull back to then allow you to get an entry that is more likely to be a cleaner impulse, because more like the people that are moving the markets are more sure of where they want to take price, so they're going to make it cleaner. They're going to make the move cleaner rather than the first one where people are still going to be going with the trend and they have to price has to fight that in order to turn things around. So yeah, I hope that makes sense. I will be doing other videos on it as well. But yeah, it's just about making sure that you're not always trying to get in essentially the counter trend pullbacks whenever it's actually just a pullback, not a reversal. As you can see in the time that we've been on this call, this video, dollar CAD has made a decent move in this current 1 hour candle, and it wouldn't surprise me if price does make a new low of the day today, and we start getting down into this daily support at 1.2690. There's no reason for price not to, and a lot of people will have entries below here that they think that it's good for longs just because you see the buyers in this area rather than actually looking at the whole picture.